Zero to millionaire in real estate? It's possible and less volatile than Tesla. Check it out, linked down below. Price goes up January 31st. Email us at staff@meetkevin if you want a bundle. Wow, we actually got a bingo this time. In fact, we got bingo twice. Now, we'll go through everything that was just said in the Tesla earnings report, the Tesla earnings call. We'll talk about the good, the bad, and, well, let's just get right into it, okay? First things first, when it comes to earnings, yeah, they missed, okay? Tesla's missed 6 out of the last 8 times, so making the bet that Tesla's probably not going to do super well was probably the right bet. In fact, it is probably why the stock basically sold off going into earnings in the first place. At the time of recording this, in the post-market, it is down 5%, and our next fib retracement does leave us with 175 in sight, which isn't great. We're looking like we're gonna open below 200 tomorrow, so you're below a psychological threshold. Will that lead people to buy the dip? Who knows? We'll find out. But what were the numbers? Well, again, adjusted EPS missed by 2 cents, coming in at 71 cents versus 73. Free cash flow beats at 2.06 billion versus the 1.45 expected. Gross margin missed with 17.6% versus the 18.1% expected. And X credits, we came in at 17.2%. We've got this summary over here at eHack. I will say there is still no bottom in a margin. It is worth noting that production costs came down 3.2% from the last quarter. We've been seeing price declines come down, but it's worth balancing those price declines with the fact that lithium prices have been plummeting, which is good, but that's just one component here, and we want to potentially see lithium prices come back down or continue to come down. But we also want to see cost savings in other areas, which we are seeing, and is probably why we've been seeing these cost declines here. Really, it's a way of saying, hey, there's deflation in manufacturing, whether that's coming from innovation or that's coming from cheaper commodity prices, or it's coming from both. For example, going to a 48-volt architecture system and the massive reduction in need to use copper is one of the ways that you could actually save money. However, we are coming to a limit in terms of how much of a reduction you could actually get or expect from Tesla's production costs. We're coming up to about a $36,000 cost per vehicle. Tesla calls that a limit, so imagine that as sort of this line that's hitting this 36,000 limit. The analysts and executives in the calls did sort of indicate that, there's still more we can do, don't worry. I'm not sure if they were just saying that because they're sad the stock is down. Keep in mind this full update totally for free over on ehack.com. And we also have a big househack update that's out. So when you're done watching this, go check out that househack update. A little scary, but also exciting when it comes to the real estate market. Anyway, no production estimate given for 2024. This is in the bingo card and in the actual call. We got nothing. Bingo card, earnings call, nothing. The only thing we heard is that production would be lower for 2024, but we didn't hear how much lower, just lower, which is interesting and kind of annoying that we had no guidance at all. Some of the comments regarding, or some people were commenting that the next generation investments could be why production might actually maybe even go as far as negative, below the 1.1 million vehicles per year. I don't think that's true. Elon did make it clear that Q4 is growing production at a rate close to 2 million. But then again, close to, I guess 1.8 is close to 2 million. But Elon did start off by saying that, hey, we're close to 2 mil. He's very, very excited about the next-gen platform, calls it a remarkable revolution in manufacturing, one that will be first tested out in Giga Mexico. However, they won't conduct any product announcements here, and then they will only build Giga Mexico after they tested out the manufacturing in Giga Texas, which means you're going to have the manufacturing line tested out Giga Texas probably late 25. Then in 2026, you'll probably get to Giga Mexico, and we'll probably announce a third Giga location for the next-gen platform at the end of 2024 or early 2025. Which really means for us to actually price in the next generation model, we're probably looking at mid this year before you actually start pricing that in. Stock market usually tries to price about 18 months ahead. So 18 months ahead does put us at about June, July before we start pricing in the next generation platform. The ramp of the Cybertruck is expected to be longer and slower than other models. The Model 3 being 3-year hell, as Elon says, with the Model Y being slightly easier since it borrowed a lot from the Model 3. No mention on the earnings call of solar deployment. Those solar deployments substantially negative, 33% to the negative in Q1 of 2023. Flat Q2, negative 26% in Q3. Those are all sequentially, mind you, which is not great. Another 16% down in Q4. Operating margin appears to have bottomed at 7.6%, now up at 8.2%. Storage grew 2.25 times in 2023, but did fall to 19.5%, or did fall 19.5% in Q4 from Q3. So some kind of sequential slowdown there in solar and batteries, not great in the near term for Enphase. Roughly $29 billion of cash, 24-ish billion in debt/payables, 6.3% growth in superchargers quarter over quarter. Installed vehicle capacity is flat at about 2.35 million. So it looks like we'll probably be producing slightly below the installed capacity. Other things that we are looking at is basically saying, look, we can't predict what gross margins are going to do. The company's obviously still got pretty good gross margins at 17.2% ex credits. That's pretty remarkable. But without that real growth, which they say is really driven by interest rates, it's hard to say what margins are going to do. Elon says if rates come down quickly, margins will go up. If rates come down slowly, margins won't go up as fast. Pretty straightforward. Shows you that Tesla is an interest rate sensitive company. In my opinion, that can still mean recession resilient, but not interest rate resilient. Very big distinction. That's very important. Company talking about being between two major growth waves, essentially a way of saying, hey, we're going to be at a little slower period of growth. That is, we may have been growing at 40 to 50%, then we hit a little bit of a trough, and that's hoping to set up for the next S curve. Actually downplayed Optimus here. I was pretty surprised, not Optimus, Dojo was downplayed. I was pretty surprised with how much Elon Musk downplayed Dojo. He called it a high potential, high risk, a project that has potential, but that is high risk, high payoff, and that it's potentially a long shot without a high probability of actually occurring. This is why they're undergoing with a dual path approach to figuring out artificial intelligence, which is basically a way of saying, like, we're all in on NVIDIA while at the same time all in on Dojo at the same time. Interesting way to put it. And I do think that downplays Dojo quite a bit more than I expected. They are about to complete version 3 of Tesla's hardware. That, worth noting, is that's actually hardware 5. That's because they started with Mobileye, then NVIDIA, and then 3 versions of Tesla hardware. They are not seeing any interest in other companies in the scope of full self-driving licensing. Even though Elon's open to that, we're not seeing anybody actually bite on it. He seems to think that other people don't think it's real yet, which I agree. That's why I think they ought to, consider advertising how beautiful that full self-driving is, but they might get in trouble with the regulators if they do that. Lathrop facility is adding another production line, expected to double its capacity for battery packs from 20 gigawatt hours to 40. Inbound logistic costs are coming down. They're optimizing and negotiating. On advertising, they have run digital targeted campaigns to drive awareness, education. However, the biggest issue they still see is affordability. They are trying to address misconceptions of EVs on safety and affordability, but everything ultimately comes down to price, and they don't want to overspend on advertising. By the way, if I haven't made it clear yet, I'm back to doing stock market open live streams. They're just on a different channel. They're on the Meet Kevin market open live stream channel. It's linked down below. If you hit notifications on that or just subscribe to it, you'll just see it every morning. The market's open at 5:25 a.m. And then, of course, this complete summary, including our bingo card, is available at ehack.com. You'll see the link down here. You'll see the video stream with all the live information. And you'll also be able to scroll through and see some other updates here from employees let go, eHack, Red Sea Talk, Taylor Swift, whatever, ASML, Texas Instruments, some cool information here on ehack.com, totally for free, totally a free service, for free forever. Well, some of the things that I was surprised that did not get mentioned, I was surprised we didn't, I wasn't really surprised we didn't get anything on Uber or a van, but I was surprised that we did not get any Red Sea commentary. We did get bingo twice, boom, boom. Elon did walk back the 25% stock comp. He mentioned, this is not to get economical 25% control. It's simply he wants more voting control. And he thinks he can accomplish this with a dual class share. That he believes Tesla is on the path to creating an AI and robotics juggernaut. And he doesn't want to control it, but he also doesn't want so little influence that I could be voted out by some random shareholder, he argues. So we did not see any comments on a solar bottom, no talk about a van or Uber, no talk about further price cuts, nominal talk about the charging network, so I left that one unchecked. No production numbers, which was really surprising. No union talk, no audible puff of a joint, no mention of digging our own grave, no mention about crypto, no mention of Earth as a market, no whatever frameworks over here. No insulting an analyst. Some of these things were slightly, DEI wasn't mentioned. Some of these may have been mentioned, but would have been relatively nominal. I can't remember if he mentioned production is hard or some of these. So it's possible that some of these others I wasn't paying attention to as much. But anyway, the ones that were very clear, of course, they have an excess supply of 4680s. This was very interesting. Plenty of 4680s, and they think they're going to sell out Cybertrucks for 2024 based on how many people are converting off the wait list. Obviously, there's a loss in that, but they think they're going to do eventually up to 250,000 Cybertrucks a year. They did not give a production target for how many they produced last year or how many they're looking for this year. They did mention twice the most valuable company in the world comment. Interest rates were complained about. Project Redwood was talked about. AI Day was briefly talked about, although Elon was a little bit concerned that other companies are just copying everything that they're doing. So, as far as the actual stock, well, I mean, not a surprise. The sucker's down, it missed. This is what's supposed to happen in earnings. The company, the stock is not as down as much as I thought it would have been, though who knows? Sometimes after these calls are done, it plummets even more. They did talk about how Optimus is extremely revolutionary, but some of the executives sort of argued like, hey, well, you know, does it do anything useful? And there was like a little bit of a back and forth there between the execs and Elon, where Elon's like, yeah, it already does useful stuff. Yeah. Stock almost down 6% now. So you are getting a bleed. The implied volatility was 6%. So we'll see if how puts end up printing tomorrow, if they do at all, since we're not past 6% yet. The stock could end up falling more tomorrow. Who knows? I do think on a technical basis, with this bad news out of the way, I do think that 175 is a pretty safe floor. No guarantees, but I've been very clear that when we failed this breakout here and earnings were coming up, 175, well, 221 was easy, but 175 was a possibility. And so we are on a nasty downtrend right now. So you do have some potential near-term pain. However, I do think, as usual after earnings, you get a few days of down, and then you do potentially have the opportunity for Tesla to play some catch up to the market essentially being at all-time highs. Look at how different those stock charts are. That's the NASDAQ for you. That's Tesla. Pretty embarrassing. Tesla stuck in that wedge there, but it is an interest rate sensitive stock, whereas companies propping up the NASDAQ right now, like NVIDIA, are anything but interest rate sensitive. In fact, Tesla's OPEX spending is heavily going into a company like NVIDIA. I think if anything here, this Tesla earnings call reiterated what we have on NVIDIA's dominance in AI. The fact that Elon downplayed Dojo is quite frankly one of the strongest pushes you could see for NVIDIA. Like, Elon basically just handed a win to NVIDIA there. So I have to give NVIDIA a big high five on that one. So I'm still personally of this dual track mindset where you can have chip exposure. That's not personal financial advice, obviously, but chip exposure. That's NVIDIA, AMD, ASML, Intel, TSM. You get your chip exposure, and then potentially you equal weight that with energy and Tesla. So that might be like an Enphase and Tesla. Those two are your anchors right now. Once those two rally, that's a good looking portfolio. But right now you've got one that's crushing it, one that's sucking, kind of hurting the portfolio a little bit. But I think it's just a matter of time of when interest rates go down where you get the whoosh, slingshot. Even if you get a correction on chips, you get that slingshot on energy that creates a pretty good looking portfolio. The question is, when is the time to enter those? And quite frankly, nobody knows. Anyway, with that said, make sure you go to ehack.com to read the full summary and all of the other news that we've got, and go check out the update that we posted at the Househack YouTube channel or Househack Twitter. You'd also follow me on Twitter at RealMeatKevin or Househack Homes on YouTube or Twitter X, whatever. And to see the full update of what my startup is doing, how we probably doubled the valuation of the company, next fundraising updates, and more. Thanks so much.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate an actively managed ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than Househack, nor am I presently acting as a market maker.